Good day and what is up, moneymakers? Before getting started with today's video, leave a like, drop a comment, subscribe to the channel, join our free Discord server, and check out our Patreon as it is a tremendous help to me and the community. To start off today's video, I'm going to teach you how to swing trade options, and then later I'll explain my reasons for why I like to swing trade options on Robinhood. Now, to swing trade on Robinhood, you're going to need to understand what swing trading is in the first place. Swing trading is defined by Investopedia as a style of trading that attempts to capture short to medium term gains in a stock or any financial instrument over a period of a few days to several weeks. The trades will be conducted based on technical and fundamental analysis of price trends and patterns. All of this means that we will be trading options within a few days to weeks, and we will base our position on the underlying stock's short-term performance. To start swing trading, you will need to pick an underlying stock to trade. I'm going to use Apple as an example. The next step is deciding whether to buy a call or a put. I have explained calls and puts in depth in my other options videos on the channel, so check them out if you are unfamiliar with them. If you believe the underlying stock price is going to drop, your position will be a put, and if you believe the price is going up, your position will be a call. You can also decide to sell a call or a put, but doing this will make your potential losses technically unlimited, whereas when you're buying calls or puts, your potential losses are only the premium paid for the option. After making a decision for either buying or selling a call or a put, you will need to decide your strike price. Options with a strike price in the money are more expensive than those with a strike price that is out of the money. The expiry date will also affect the price of the options and how their price changes. If you think a stock is going to increase dramatically for a short period of time, buying a call option closer to expiry, typically a couple weeks out, is likely a good choice. If you think a stock is going to increase dramatically and hold on to those gains and continue growing, buying a call option with an expiry multiple weeks to months out isn't a bad idea either. If you think a stock is going to decrease dramatically for a short period of time, buying a put option a couple of weeks from expiry is likely a good decision. If you think a stock is going to decrease dramatically and continue dropping, then buying a put option with an expiry multiple weeks to a month out is likely a good idea. A large percentage of options will expire completely worthless. However, this is okay, since we aren't looking to execute our options contracts when swing trading. After you select your strike price and expiry, you will determine the number of contracts you would like to trade and the price you'd like to pay for the option. Then, simply submit your order. If the option order is filled, now you will wait a few days to a few weeks and hope that your stock performs in favor of your position. To complete the swing trade, you will need to exit your positions when your option's price increases due to a favorable return because of the underlying stock moving closer to being in the money, becoming in the money, or moving further in the money. Everyone's desired return is different, but these quick tips can help you increase your chances of walking away with bigger profits. The first tip is to not get greedy. If your option increases in value by 50% in a day, do not expect that performance to continue day after day. The second tip is to lock in your gains while you're still ahead. These will add up over time if you are consistent. You're likely to walk away with more money if you lock in consistent 10% short-term gains rather than holding your positions longer and longer in hopes of turning 100% profit, while theta decay or time decay is constantly eating away at the value of the option. The third tip is to not hold your positions for too long so you do not expose yourself to excessive time decay of options. Remember from before that time decay is constantly eating away at the value of the option if the underlying stock is not increasing in price. The fourth and final point is to not be afraid to use a day trade to lock in huge gains if your position does really well within the first day and are unsure of future performance. Now, you will not want to miss why I swing trade options, as they may become reasons why you will want to swing trade options or may intrigue you in some other way regarding swing trading. Remember, these are my personal reasons based on my personal experiences while swing trading. You may have a completely different experience, outcome, and outlook on swing trading. My first reason for swing trading is that I avoid the pattern day trading rule, or PDT rule. I have a video explaining the PDT rule and how to get around it, which you should check out after this video. Since I open my positions and sell them within a few days to a week to sometimes several weeks, I do not have to worry about the PDT rule. My second reason for swing trading options is that I avoid experiencing long periods of theta decay due to holding these positions for such short periods of time. These short-term positions minimize the losses from time decay from holding positions for long periods of time. My third reason is I am avoiding holding my options till the expiry date, which, if you remember from earlier, a majority of these positions in the end will likely end up expiring worthless and will not execute. Therefore, I usually end up selling my positions for a profit within a few days without having to worry about my positions being in the money by the expiry date. The fourth reason I swing trade options on Robinhood is that if you're buying calls and puts, it is very easy to exit positions when things are going poorly and as well as when they are going great. This allows you to potentially walk away with less losses than you would if you were holding until expiry, or walk away with huge gains easily. Remember that options can become worthless if they go too far out of the money, so there is potential to lose all of the premium you paid even before expiry date. While swing trading, you are going to need to realize that this way of trading is going to swing you to all-time highs on options, and sometimes it will swing you straight into the ground. A great quote from Swing Trading article by Warrior Trading is, "Swing trading options requires a hefty amount of risk tolerance. At some point, you'll need to stomach seeing your account balance sway like a palm tree in a hurricane without panicking." I've linked this article in the description as it is a good read. That is pretty much all I have for today's video. If this video helped out or interested you in swing trading options, smash the like button, drop a comment, subscribe to the channel, join the free Discord server, and check out our Patreon page using the links in the description, as it is a huge help and greatly appreciated by me as well as our Discord community. And as always, have a great day.